Hi everyone, and welcome back. In our last video, we talked about the first part of accounting equation, assets. These are all things your business owns. Today we are diving into the second part of the equation, which represents how you fund or pay for those assets. Simply, whenever you started a business, you have to ask yourself where I'm getting the money to buy all the stuff I need, like equipment and inventory. The answer comes from two main sources. The first one is liabilities, money you get from others, which are debts, and equity, money you put in yourself, which are ownership. And that brings us to the full accounting equation, assets equal liabilities plus equity. The first part is liabilities, your debts. Liabilities are all the debts your company owes. Think of them as the money you have to pay back to people who lent it to you, like banks or suppliers. The most important thing to remember about liabilities is that they always have priority. This is why we can't switch the order of the accounting equation. We can't say assets equal equity plus liability. It is wrong. Okay, why? Simply because if your business ever goes bankrupt, the people who loaned you money, who are creditors, get paid first. They have the first claim to any assets you have. This is a form of protection for them. Okay, let's imagine that. I have opened a business in a mall, and if it goes bankrupt, the first step is to sell all assets, inventory, furniture, etc., and convert them into cash. Then, before anyone else gets a single cent, all that money goes directly to pay off your creditors, my creditors. Okay, that was liabilities. And now let's talk about equity. The owner's equity, actually. Now, once all liabilities have been paid, any money that is left over goes to the owners. This is the equity part of the equation. Equity represents the owner's stake in the company. The owners have a residual claim, which means they only get whatever is left after all liabilities have been settled. Okay, now let's summarize. The accounting equation shows you where your business money comes from, either from debts, liabilities, or from owners themselves, equity. And remember, the debt holders always get paid